Good morning, traders. It is Thursday, August 21st. Taking a look at the charts, equities a little bit more selling today. We got the equities down about 0.5 to 0.6%. Yesterday, if we were to just zoom into the chart, I'm going to go to the SPY just so we have regular trading hours only. You can see here the market opened, sold down, it flushed way down with some big volume, and then had a rebound into the close. Now that was a step back one day. Yesterday we talked about the fear among investors. One down day here, everybody started to panic. That carried over into yesterday to what looks like a washout type of low, and that washout low is still keeping the fear high. And of course, that has got people today moving over to they're putting in sell orders, and it's making the market drift lower as they get closer because they're worried today the market is going to fall off a cliff. This usually is a sign of short-term price action, a short-term pivot low. And if we look at the 30-minute chart, we are dipping into some lime green oversold territory. Now, obviously, if it goes too far and collapses, it can reset the trend. It could turn it down temporarily. But if we just zoom out on the chart a little bit more, you can see here, these turn into be also opportunities where the market pulls back down to this pink line, which is the 20-day moving average. We've had it happen several times, and usually we see a multi-day, multi-week rally from that point. So the market is trying to do what it's doing. If you feel really fearful and scared, which I know a lot of you are based on our inboxes and comments, that's usually a good sign. When you're scared, that's usually when the market's going to put in a bottom. When you don't want to get into a trade and you think the market's topping, usually the market's going higher. It's just the way the markets move. They climb a wall of worry, and as soon as they pull back, it's the sky is falling. And it's just the way our emotions are, very, very extreme, and they swing from one to the other when it comes to especially managing money here. Now, if we take a look at, let's take a look. Yesterday, we did see money flow into the defensive plays. So stock market was showing some fear. We saw the utility space. It ended up having a pretty nice push up. It ended up closing back down as stocks started to rally. People started to move back out of utilities. Consumer staples had a very strong move, very boring sector. It really popped and continued to push higher as a defensive play. And healthcare is usually seen as a defensive play as well, and it moved higher while the stock market struggled. We also did see gold and silver move up as that type of play as well. So a nice green bar yesterday. And that's really just the money is kind of sloshing between risk on or risk off. Now, there's no doubt the Mag 7s are the one doing a lot of the pushing and pulling on this market. Really fell off a cliff. It is a crowded type of play, meaning everybody's trading those 7 stocks or the basket of them or the ETF. And of course, we saw massive volume. So when people get scared and they're all in the same stocks, which are the Mag 7s, the Mag 7s get hit hard, and of course, they are going to pull the indices down fairly sharply. So it's just a cleansing event at this point and trying to shake things up before potentially we shoot higher and continue up, because the overall underlying trend is still positive. But we do have Jackson Hole around the corner. I think that is starting to get priced in. People are getting scared, so people are starting to get positioned for that. They think there's bad news coming, and of course, once things start to slide, it's a snowball effect. A bunch of people start to get more scared, and they all panic. And we'll see. Even if bad news comes, as we know, good earnings and blowout earnings with NVIDIA get sold into. We see the stock fall 5, 6, 7% at times. Bad news hits and the markets rally. It's always usually the opposite of what people think. So I think things are getting priced in. Bad news is going to hit in a couple days, potentially, and it's already been priced in, and the market has a bounce, and it's not as bad as people thought it was potentially. So we'll just see how that goes. Now, overall, crude oil up about 0.4%. It's still trying to figure itself out. If we take a look over at Bitcoin, it is moving down as well. Again, stuck with the stock indices. It is not digital gold at this point. It is moving down with the NASDAQ and selling off. It had a little bit of a bounce yesterday, held its ground, but overall, it still moves pretty darn close to the stock market. And unless it can really break free of that, I wouldn't be betting on Bitcoin as digital gold, and that could go higher as the stock market rolls over. It could be quite the opposite. Yesterday, we did see gold and silver miners move a little bit higher. They had a bit of a bounce as a defensive play as gold and silver were moving up. You can see here they had a little bit of a rebound. Now they're having this little flush in this shakeout. This is usually kind of what happens. We talked about this the other day, just before the market reverses. It usually has a drop and really shakes things up, spooks people out before it wants to rebound. So that's what we're looking for in the market. You can see the silver market having some lime green bars after a pullback or consolidation. And usually we start to see the market move higher from there. Some of you want to see the chart of bonds. We've got TLT here. You can see it's still flatlining. It's kind of dead at this point in a stage one or still in a downtrend. So I wouldn't be too excited about this. Eventually it will come to life and it should become a very good play, but that still might not be for many months or longer. So we'll just hold off on that. And in terms of the Jackson Hole meeting, we had a member concerned about that. And does it play into our analysis? We don't really use news at all into our, it doesn't matter if the Fed meeting is the following day or if Jackson Hole's around the corner or whatever, we still take our positions. The markets are, money's moving into these markets before the news events. We're riding the coattails of the big money flow. Usually the big money flow or the insiders, if there really are any, are usually getting in position in the right direction. And that's what our system picks up on, is what's going on underneath the hood. We get on with that trend, and then the news generally plays out in our favor. And even if the news doesn't play out in our favor, because the trend is up, that move against us gets bought up by opportunities. And so that negative news or that news that shocks the market becomes an opportunity for those people creating that new uptrend to purchase and absorb that selling and build their position. So we just have to let the markets unfold, and whatever happens with Jackson Hole, it's either going to send the stock market higher or it's going to create a shakeout, and then it's going to figure out what it's going to do. But the underlying trend is up, so any sharp drops usually are going to get bought into and start to move higher. And it is pretty much a 50-50 coin toss when it comes to news. You don't know which way the market's going to move. If the long-term tide is going up, the short-term tides are going up, the waves are going up, that's where the odds are. The odds are price is going to go higher no matter what the news, good or bad, because it will support any selling pressure that comes into the market from it. So again, the news is usually a 1 or 2 day blip on the chart, and then it's kind of forgotten, and everybody's, the markets move on without it, and people scratch their head, usually going, that didn't make any sense. But the markets don't really make a whole lot of sense. That's why we follow price. It's pretty straightforward. It's positive or negative, up or down, and that's it. Talk to you soon. Bye-bye.